Can everyone hear me from here? Okay. Good afternoon. All right. In the next 10 minutes, I hope to show you that policymakers and investors alike need to start thinking differently about China. I think there is a lot of understanding that we need to think differently about China, its role in Africa into the future, and how African governments and businesses might best respond to take advantage of new opportunities and also to manage their risks well. This is doing its own thing. Okay, so the importance of China's 5-year plans cannot be overstated. We haven't heard very much about that today, but certainly Peter did allude to it earlier. Anyone truly interested in understanding China's role and the effects thereof must start with an interrogation of these plans, what they look like. China is one of those few countries where there is a level of predictability as to how the economy is likely to unfold if the Chinese Communist Party can continue to manage that transition into a different looking economy. So the current 12th 5-year plan will end at the end of this year, if I'm not mistaken. And then the next plan runs from 2016 to 2020, which will be the 13th plan. But essentially, my understanding is that the 13th plan will be a continuation of this one, which envisages the end of China's industrialization phase by 2020. And so for Africa, that means a significant slowdown in demand for the commodities that have driven China's industrialization. Moreover, the country is facing an environmental crisis that Roger alluded to, that it has no option but to take seriously for the sake of maintaining the social contract. The combination of these factors essentially means that coal, and to a lesser extent iron ore, will not be demanded to the same degree as before. And then secular stagnation in the rest of the world, total factor productivity growth in sharp decline, and climate change negotiations currently going on in Paris mean that everything is different. And the commodity price boom is largely over. I've just been at a Mines and Money conference in London, and of course everyone in the junior sector in mining are trying to convince themselves that the commodity boom is not over. The commodity price cycle will do what it's always done. I think that the future looks a bit different. However, as the market truly bottoms out, we're likely to see some bankruptcies, some mergers and acquisitions across the commodity sectors within Africa, probably more collaboration between Chinese state-owned enterprises and the majors like Korea and Billiton, if China still wants to work with Billiton and Vale after what happened in Brazil. This contraction in the sector will result in production cuts, which will take some pressure out of the supply side dynamics that drive prices downwards. So excess supply was arguably driving prices down just as much as decreased demand. And that supply had come on stream because it was chasing high prices. So there were a lot of players that came into the commodities market chasing higher prices. And some of them will disappear simply because they aren't well funded and they simply can't withstand the long run impact of persistent low commodity prices. So not long ago, coal was at $70 a ton or more, and iron ore was up around $100 a ton. They're both now down around to the $50 a ton mark. So that is a kind of new normal, and oil likewise. Many analysts are suggesting would hang around at $50 a ton, $50 a barrel rather, for the next, for the foreseeable future, especially given that Iran is planning to double production by 2020. But the new normal does not mean the end of commodities. Increased consumption in China and the lifting of the one-child policy, many analysts saying a bit too little too late in terms of demographic dividend, will mean both that more food will be needed, along with commodities that are inputs to high-end technology products. So Africa, if it positions itself correctly and implements coherent, integrated policies that do make the doing business environment easier, could still really take advantage of this new normal. So there's a book that I picked up in London called My Electrician Drives a Porsche, ? And it's really about understanding the importance of copper for electricity that will be the key to reducing poverty and to moving the world away from fossil fuels into solar baseload and so on. What do you need? You need copper. So you can't get away from the fact that copper will be needed in high quantities for all manner of products, but especially electricity. Likewise, platinum will play an increasingly important role in the electric car as fuel cell technology starts to play off. Platinum is pretty much, at this stage anyway, an irreplaceable ingredient for fossil fuels, for fuel cells rather, definitely not for fossil fuels. So you heard it here first. If you're looking for some investment tips, copper, platinum. And the Chinese central bank is also buying up gold, as is the Russian central bank. So that suggests, I mean, this is hugely speculative, but the gold price could recover. Over the 3 days that I was in London, everyone disagrees over where gold is headed. But you know, sometimes it's about the confidence with which you assert that the price will go up, and then you hope for some kind of self-fulfilling prophecy. So be careful what you hear. Either way, if the gold price does recover, you know, especially considering central bank purchases and growing Chinese middle class, a growing Indian middle class that may demand gold jewelry, the likes of, you know, that kind of scale we haven't yet seen. So there is a possibility that gold would recover. All right, the juxtaposition of these two pictures pretty much reflects the trade-offs in light of what I've just said that African countries will now have to manage in light of the new normal. So on the left is a map of the prospecting licenses awarded to a company in Botswana to prospect for iron ore. Okay, so I mean, given the decreased demand for iron ore isn't really a good kind of picture to use, but it's analogous because those prospecting licenses were granted right next to the Okavango Delta, UNESCO World Heritage Site, and so that creates serious environmental risk. Now, it's not a Chinese company, but the fact that these deposits happen to be right next door to the Delta give you an idea of the kind of trade-offs that African countries are facing when it comes to mineral extraction. It unfortunately just happens to be the case that many minerals are deposited in pristine ecological areas, and you know, it's not as though you're just destroying a bunch of Mopani wood. You know, if you destroy the delta, that's the end of tourism for Botswana, and there is talk of upstream development in Angola. I mean, it's difficult to get the facts on this, but Ricardo Soares Dolabera has been saying that there are Chinese Angola agricultural deals, for instance, that suggest a move away as well from the Angolan government having a strong hand in the relationship with the Chinese government. And so he's of the view that these guys are at risk of giving away land for nothing, you know, at potential devastating consequences downstream for places like the Delta. So the point here is that natural capital is not correctly priced. That's not an African phenomenon, it's just a global phenomenon. We tend to treat natural capital as a free good. And there was a good paper written in 1972 that still hasn't had a response by Georgescu Rogan, which he said, you know, what we're doing at the moment in our global economy with our solar growth models and so on is pretending that we can make cakes without flour or sugar. Actually, we have to stop treating natural capital as a free good. We need to price it better. But the fact that we don't price it properly explains the existence of negative externalities, which is just the divergence between social costs and private returns. So polluting firms don't internalize the costs that they offload onto society, invariably the poorer members of society, and some of the water issues that Roger's just been alluding to in China, certainly. But African countries have to avoid polluting their rivers because we're going to be increasingly water scarce. So the best possible outcome from the COP21 negotiations would be a consensus on how to measure the value of an untouched wilderness. I doubt we're going to get there, but at the moment the best we have is tourism revenue generation. Tourism revenue gives us some idea of what pristine wildernesses are worth, and so when you're evaluating the risk, say between a copper mine, which like I said earlier, at the risk of not contradicting myself, copper is going to be really important, but if you want to mine copper in environmentally sensitive areas, you have to consider what you're giving up over the long run. And unfortunately, like Keynes said, in the long run we're all dead, and for politicians, political cycles are often incoherent with long-run planning around environmental preservation. The other problem is that tourism doesn't deliver the volume of jobs that African economies require if they're to absorb this youth bulge demographic that we've been talking about this morning, that is desperate for employment. And so mining projects are increasingly located in areas that are ecologically sensitive, and the short-term reward of mining rents for governments often crowds out their incentive to preserve wilderness areas for the future. Moreover, then, the demand for food and for furniture, not only in China but also in countries like India, also mean that wilderness areas are at risk of being devoted to agricultural and forestry production. I don't have answers as to how we get around that. And I have here a note that says Deborah Bradegam has thankfully worked hard to dispel many of the myths around Chinese land grabs and so on. But there is this question that sort of pervades the media that give you scary pictures of pristine wilderness being devoted to rice paddies. Not something that we do want to see. Either way, the prospect of further loss of wilderness area to either mining or agriculture or forestry or all three raises this difficult question of how we manage biodiversity loss if that's the price we have to pay. And so it's not only then that agriculture and extractive industry expansion could threaten ecological integrity, it's also that infrastructure projects that are currently underway to get food and minerals or hydrocarbons to port are inadvertently creating new threats to biodiversity preservation. And this is an issue that we shouldn't shy away from. We do need more research into understanding, for instance, the dynamics of the ivory trade and how economic activity in Africa at the moment may facilitate the distribution of ivory into consumer markets, primarily in China. The US and Chinese governments have recently publicly committed to enacting a nearly complete ban on domestic ivory trades, and a credible commitment to this process would go a long way, not only to preserving Africa's elephants, but also the biodiversity replication that elephants themselves help to generate. This issue is on the agenda for FOCAC 6, so that's promising in and of itself. The Chinese government is, of course, in a difficult position because the domestic ivory trade is highly prized, and so trying now to ban it puts them, I think, in a difficult political position. As it stands, infrastructure expansion combined with a number of other factors threaten elephant populations because they may facilitate the export of ivory to consumer markets. We need to do more research in this area, just what I've been saying. But this overt commitment to ending the domestic ivory trades, both in the US and in China, is good news for biodiversity preservation in Africa more generally. And then an additional point, in lining up with what Professor Lodge was bringing to us in the previous session around security, is that we have evidence that ivory increasingly serves as a form of currency for arms purchases to fund militias in South Sudan and so on. So this adds a security dimension to the debate. And part of what I'm doing is just trying to show how everything is connected. This is not just about the future of the extractives industry. You have to think about everything in relation to their trade-offs. Economic activities always come with some kind of negative externality that has to be managed. So the quicker China and the US ban the domestic trade in ivory, probably the better for everyone. So where does this leave us? China's economic restructuring does not signal the end of commodities, but it does signal a shift in the composition of the mineral export basket of the future. I think I could probably safely say that coal is pretty much dead, which pleases me greatly, and copper is king. But that means that the trade-offs that surround copper being king have to be carefully managed. In the midst of this shift in composition, African governments need to ensure that the expansion of the extractive industries, along with the expansion of agriculture and forestry, does not threaten the biodiversity on which Africa's future ultimately depends. The continent must do everything in its power to protect renewable resources, and wherever ecological irreversibility is a risk, they have to be courageous and resist investment that would provide short-term gains at the expense of long-run sustainability. Thanks.
Thank you. That was excellent and interesting. China does actually sit on a lot of shale gas, equivalent to something, of USA proportions. So, if you look at the impact shale gas development has had on America's environmental footprint internationally, and you draw parallels with China, then that'll get you thinking, and potentially great for green growth if it's used as a bridge. Look on the ODI website; you'll see it up there. Okay, thanks, Ross. So we're over now to Xiaoxue.
Hello? Working now. Okay. Great. No. Hello? Okay? Now? Perfect. Sure. Okay. Thank you. So my name is Xiaoxue Weng. I do research on natural resource governance in Africa. I don't call myself China-Africa expert. My training is primarily in forest governance, land tenure governance in African countries, and that's where I conduct my field work. I spend a third of my time going around in the bush and in cities talking to people, African people especially. But I will present a case on the Chinese involvement. And just for those who are not familiar, my institute, IIED, we are London-based, but we've been working in African countries for the last 45 years on natural resource governance and other issues. And I will present this research based on my previous work with C4, Center for International Forestry Research, and then University of Oxford. Okay, so Ross painted a very good interacting big pictures. I'm going into the specifics. I'll provide you the context of my research and the myth and reality and challenges, and if time allows, opportunities for constructive engagement. So, the context. This slide I put up this morning after listening to all the great speakers. I thought there were at least 4 missing pieces from the discussion this morning, as great as they were, because I primarily look at rural development and poverty and marginalized communities. One of them is rural populations, I just mentioned. Africa's urbanization rate is 40%. There are still 0.7 billion people who are in rural areas, who are dependent on informal agriculture, informal logging, small-scale mining. And that's the focus of my research. And if we are talking about population dividend and youth employment, rural areas is where loads of these young people come from. And to understand the employment dynamics in the informal economy with the young people in rural areas is key. Another missing point, although some speakers alluded to, was private Chinese SMEs. What kind of business models do they employ? What are their impacts? And how can we work with them? And finally, green growth, sustainability was not an emphasis in any of the previous speakers, so I hope to touch on that. But I think the biggest elephant sitting in the room, which hopefully will interest everybody, is Africa's informal economy. Peter earlier mentioned, but this really is key for anybody working on Africa's development. Some statistics, or before that, some definition for those who are not familiar with it, but I'm not going into it. African Development Bank calls this one of the major development challenges of this century. Some statistics. For example, 90% of employment in Tanzania, Zambia, and other countries is in the informal sector. 38% of the GDP in some African countries comes from the informal sector. And now going to the natural resources I've been talking about, more timber is produced informally by unregistered artisanal loggers like him in Cameroon than formally produced by large companies. And I'll show you some numbers later. It's staggering. It makes you question what is formal and what is informal. Another number, 90% of gold produced in the DRC come from informal artisanal miners like this. So that's the context. And this informal economy in Africa really presents huge opportunities and challenges for the 0.7 billion people that I was just talking about. And how does China come in? Now, you've heard about allegations of illegal conducts by Chinese loggers, Chinese miners, and so on. I'm going to bust some myths, hopefully, and will present some reality through the forestry case. But I believe some of the conclusions I will draw are relevant to agriculture, relevant to mining, and other sectors. So the misconceptions, environmental and social impacts in Africa's natural resource sector by Chinese investment, negative impacts on local communities, it's entirely Chinese actors driven, lower compliance with environmental regulations compared to other companies, other players, and that Chinese government really should be doing something about these people. I'm going to disagree with all of this based on empirical research, systematic research I've been conducting on the field. I will try to generalize to the extent I can, but I understand some limitations here based on the fact that I'm on the ground looking at specific cases. Now, going to the forestry case, why are we looking at forest? I think you are all aware Paris COP climate summit going on right now. The Congo Basin, this is the Congo forest over DRC, is the second largest tropical forest after the Amazon. So it has huge potential for carbon sink. Another reason we are looking at this is more than half of Africans depend directly or indirectly on forest resources for their lives. And there are numerous research on this. And another two more reasons we are looking at the forestry case is that even if a lot of the communities depend on forest resources, the ownership is mostly belongs to the state. More than 90% of Africa's forests are owned by the states. And finally, China angle, significant increase in China-linked trade and investment in the forestry sector. Some of the numbers here, 75% of Africa's timber and 90% of Mozambique's timber go to China. 85% of the forest export from Cameroon to China are logs, which means barely any processing and added value. And finally, Chinese investments in Africa, in Cameroon's forests, this is latest research from last year by our project, increased by 800% in the last 15 years. That's staggering, really fast-paced increase. So, I'm going to talk about Cameroon, and it's going to be an interesting story. I hope you'll stay with me. Before that story, I have to give you some context. I talked about the informal sector. This is how it looks like in Cameroon and many other African countries. These are artisanal chainsaw loggers cutting tree by these chainsaws and carrying them out of the forest with 5 people, 6 people together. And that way of production, producing timber in Cameroon, occupies 57% of total timber production. If you move to DRC, it occupies 87% of the total timber production. And this is all in the informal sector. They don't have licenses. So the government considers them illegal and harass them. But if the number is so huge, you would start questioning who is illegal and legal and legitimate. But I'll leave that to you. So now the interesting story, where I spent weeks in the bush trying to hunt down. This tree is called the bubinga. It's a beautiful tree, 70 meters tall about when it grows, when it matures. And this is what I was doing in the evenings, trying to follow these lorry trucks that would go out of the forest because during the day they would need permits, but in the evenings it's easier. And this tree, when it goes to China, it becomes like this. Many people might be familiar with the rosewood furniture industry in China. It's traditionally emperor's furniture. So as Chinese people get rich, they're very drawn to this luxury status. And that's a lot of environmental NGOs would accuse that demand to be behind selective deforestation across tropical countries. But what I found, in a nutshell, when I went into the villages and spent quite a lot of time interviewing people, focus groups, and systematic sampling, is they say they logged according to customary ownerships. So not sanctioned by the state, but based on their own traditional informal rules. And they supplied the Chinese traders, and the Chinese traders followed the rules they gave. So no government was involved. But the Chinese traders gave them fast payment in cash as much as they wanted to, they asked. And these local community villagers used the income to improve their livelihoods. And I have some very specific data on this later. And what happened is, after seeing how lucrative this informal Bubinga trade is, the Cameroonian government decided to impose a partial ban. But it's partial because they still allowed the big companies to continue. They didn't want the small people to be running around because many people in the ministry suspect the government officials wanted a piece of the cake. But this led to the elite capture of the lucrative trade and further marginalized local communities. This is the nutshell. In terms of methodology, I interviewed 67 people. Out of those, almost half were illegal, informal traders directly engaged in this specific trade. In terms of how long do I have more? 4 minutes. Okay, then I might have to skip the details of this fascinating story. But if you see this value chain, this is the Chinese, everybody else are Cameroonians. And if you really record the value chain configuration, which I did based on each interview, you see the critical role played by these guys and how they facilitate the trade and how it's impossible without their active agency to make this happen. Some of the data, I have some quantitative ones, but this might be more interesting. So, sorry, I need to. For example, it was very lucrative compared to whatever normal informal trading they were doing. So price doubled to quadrupled, up to 17 times more income than farm work they received. And some of the quotes that you could see is, you know, the Bubinga trade has done wonders for me. They built houses and bought cars. And you'd think, well, usually media reports say that this is all dominated by Chinese players, but the Chinese were complaining there are too many Chinese players and everybody wants to take it for as cheap as possible. So actually the rural upstream actors, the villagers, had a lot of bargaining power to dictate the terms of their trade. Some details I'm going to skip. Once the regulation, the partial ban came into place, the supply chain legalization strategies of Chinese actors changed. Basically, where they got their woods, where they got their fake papers, all of that changed. It changed to include more powerful political elites and economic elites. So some of the quotes would illustrate. Now they use a guy from the ministry to escort the illegal logging car. You can get some of the officials for these prices, but it really depends on your relationship to the government. But as I said earlier, the formal trade continued, and in the end, small actors are excluded in the trade. And a logger was saying they really don't know how to bring back the Chinese buyers anymore, although they want to. And this is what happened, star to the political economic elites, and the small-scale actors are excluded. Now, the impact on rural poverty, loss of cash income for subsistence activities. Some of the interview data, they used the cash for for illness, for sending children to school, to maintaining farms, and critically also loss of youth employment. There was one person who was telling me when they were logging, they had enough income to sustain their own households, but now that they are not logging, all of the brothers' eyes are on their father's cocoa farm, because that's the only source of employment if they lose this one. And it really struck me when I met this person who sowed tree on her land. So the children must go to school, and you leave your trees there. What is your child going to do? I honestly wasn't expecting this kind of response. I went in thinking, okay, they're going to bash the Chinese. But no, I was really surprised. I kept asking, are you? And I kept triangulating throughout my interviews. These were the general consensus. And finally, because of the informal economy and the natural resource governance complexity, this is some of the sentiment against the establishment. We don't understand Cameroon. Everything we do, we the villagers lose. We do not earn much. It's the administration who is always the winner. And if we must regulate this activity, they understand that they have to, but let's do this so that everybody can apply for the license. Takeaways. The key role of African actors. Okay, yes. And that I really strongly stress that any problems associated with the Chinese engagement in the informal economy in the sectors I spoke about, deeply embedded in Africa's governance challenge, natural resource governance challenge. So they're not China-specific, I argue. They are Lebanese, South African loggers doing the same thing. The informal economy actually provides an opportunity for livelihoods and allow the rural communities to overcome elite captured system. I'm happy to talk for hours about that if you are interested in extractive institutions and colonial legislation of forest resources and others. And in compliance with environmental regulations, some actually empirical research show, no, all companies are not complying with environmental regulations. Local, Western, they're all the same. So if you're talking about Chinese investment into deforestation, then you need to talk about all the others. And the root problem would be Africa's natural resource governance and weakness in enforcing law. And finally, these guys are Chinese private traders who might spend a few years here and there and doing wood business this year and mineral business another year. How do you expect the Chinese government to regulate, especially if these companies are registered in Africa? And back in China, they don't even recognize them as Chinese businesses. One of the interviewee told me he wanted to register for their Chamber of Commerce. They told, no, you're African business. And I think I've talked enough about that. So there are challenges, and IIED, we are academic research, but also we do engagement with government companies directly. And I talk with Chinese timber traders, I talk with Chinese government and African civil society, and we design programs so that we can build capacity to enhance to improve their sustainability practice. Thank you.
Thank you, excellent, and some really good points there about that thing we call the informal sector, which even in my area is kind of a label we attach to things that frankly we don't understand very well. It's a bit of a catch-all. I love the look of your field, your primary data collection. I hope you did a thorough risk assessment. I wish there was more like it. Okay, thank you very much. So we're over to our discussant now. Let me have a quick check on time. I'm aware of the fact you've got to be off at 4:30, right, Ross? So Yushan, over to you.
Okay, thank you. I'll try distill some points that I've made. I've taken a lot of notes. Yeah, so it's pretty cold sitting here on my own, but I understand that I don't make the resource crowd. So, yeah, I think I'm going to try to raise some pertinent questions that link to the China-Africa relationship, and I guess and also FOCAC, since it is nearing to tomorrow. And I think what's interesting for me from this perspective is really, and looking at this morning's presentations, is the extent that relations are actually moving away from natural resources and the actual pace of China moving away from its manufacturing. And that's also the question of whether economic relations predominantly still remain at a trade level versus an investment focus. And I thought what was interesting is, compared to the previous panel where the point was made that investment, and I think was important before peace and security, 2 days ago at another event, our Deputy Foreign Minister actually mentioned that peace and security, and I guess you could insert here the discussion on natural resources, is actually a prerequisite for sustainable development. So I think this, what we've discussed here really reminds us the characterization of China-Africa relations, which is you really have that formal FOCAC economic high-level relationship, and then also the informal and public level, which is the physical day-to-day interaction, and is a large part of the relationship. And also, I think the informal sector also embodies some of the complexities. So, for example, we see collaboration as well as synergies, as Xue has provided, but also there's also spaces of where there's competition. If we think of the retail sector and small businesses in Zimbabwe, for example, which is at about 11% employment rate, and most of the economy is in the informal sector, and also South Africa. But I think, we've talked a lot about this China's economic new normal, and what I think it does for me is it throws the spotlight on other areas of intersect and that are still developing, and it links with what the presenters have been talking about. And one example is, I think there's increasing looking to the marine economy. So, I mean, a lot of us have heard about China's proposition of this One Belt, One Road initiative, which is essentially about linking an overland trade network from China to Europe, and now currently it includes also a maritime component, which is largely through the Indian Ocean. And I think for Africa, though, what is unknown is really the exact intersects with Africa's own maritime initiatives. So, for example, South Africa now has its own Operation Pakisa. And how this intersects now with China's global strategy in the Maritime Silk Road and Economic Belt. And we also don't know what the impact will be, but I think the direct link at the moment is the increased building of infrastructure and transport links in East Africa. And I think that also is raising a lot of questions about what this means for Southern Africa or Western Africa. But I saw a tweet today from someone here about the fact that South Africa and China has just signed an agreement to cooperate on the Maritime Silk Road Initiative. So that will be interesting to see. And I think Ross raised an important point is, what is the impact of infrastructure or transport infrastructure, such as these kind of initiatives in the long term on the environment or on wildlife? And I think a bigger question about FOCAC initiatives is, do we have the monitoring mechanisms in place to monitor all the projects that are announced? And I think specifically on the African side is we're getting so many more numbers of projects as well as players involved from countries to sectors, but do we have what we lack and require assistance and collaboration is actually project management and to follow up on these projects. And also I think something that I think needs to be raised is also, I think, Africa's ability to negotiate. So I was speaking with a former Zimbabwean policymaker last month, and he made the point that, when China negotiates with Africa, they always bring their best, so the best suited for the negotiation, the most well-educated, and are we doing the same? So then I'd move on to another area, which is the wildlife trade. And some of us here were at an event yesterday and discussed the issue specifically regarding China. And I mean, in light of this new reality, I think one thing I'd really highlight from this, which also I think links to the forestry example, is do we really understand the broad range of actors involved and the intermediaries, and how do we, so I think that's important. But I think more important, and I suppose my interest as well, is do we understand the complexities within the demand and supply side? So similar to forestry, on the demand side, when we look at China, is, I mean, how do we manage an economy that's increasingly moving towards consumption and services? But also, I think more than economic changes is thinking, and changing thinking takes a lot longer. So are we also addressing the socio-economic or cultural drivers in different types of trade? And then I think what often gets forgotten in this debate, we look at the demand side, but what about the supply side? And do we understand the complexities on the supply side? So if we look at South Africa and the current debate on the rhino horn trade, is, I made this point yesterday, is I think there's general lack of consensus on the intrinsic value of wildlife. And until this is linked to economic development, it's going to be predominantly seen as a middle-class issue. So I think, having said that, what these cases also highlight is the divisions within society itself, between African governments and their own informal spaces. And I think one point is we've talked a lot about the youth demographic today, but I'd also want to highlight that we also shouldn't see it as one group, that the youth demographic is not just an opportunity for a voting bloc or industrialization, but also recognizing that there are different aspirations involved. And yes, I think to wrap up, and I think I really think I'd like to raise questions for the upcoming FOCAC, is I think we're starting to see increasing China engagement at the multilateral level, at the AU, UN peacekeeping, and at the same time, I think when you look at FOCAC, it still appears as if it's a set of bilateral relationships. So really, I think the question is are we moving towards a more China who's more multilateral focused, or is there still an important bilateral element when it comes to implementing projects? And also, where does Africa or FOCAC fit in China's bigger strategy or global objectives? I mean, we're starting to see an increased amount of funding pots like the AIIB, the Silk Road Fund, the new development bank from the BRICS, but what I think we're not sure about is, does this actually increase funding towards Africa and projects, or is it moving focus away? But I think this panel, the positive, and I think what it has raised for me, is such side issues that are increasingly becoming important, is also starting to create more intersects and interlinks between the formal high-level spaces as well as the informal levels. And I think in that context and the new normal, we can also start thinking about a post-FOCAC reality. Thank you.
Thank you, Yushan. That was a good summary, and you kept to time. Now, unfortunately, Ross has, as we say in England, legged it. I was hoping we might be able to get a quick response from him before he left, but it is 4:30. But we've finished in good time. So let's get a bit of a discussion going.